Press the subscribe button and hit the bell icon to never miss an interesting update from CA Nanban. Hello everyone and welcome to CA Nanban. I am your friend CA Pratik, and in this video we are going to discuss a very important provision that has already come into force from the 1st of October 2020, and that is TCS on sale of goods. So let us start this video with a question answer format. The first question arrives, that is TCS a new tax? Answer is no. TCS provision under the income tax law have already existed under section 206C of the Income Tax Act, but already it was levied only on specific transactions like scrap sales, motor vehicle sales of value more than 10 lakhs, timber sales, tendu leaf sale, etc. However, from 1/10/2020 onwards, a new TCS provision under section 206C 1H has been introduced, where TCS should be collected on sale of goods also. So let us see what is this TCS or tax collection at source. TCS is just like TDS in income tax, but with a small change. In TDS, the tax is deducted while making the payment, but in TCS, tax is additionally collected while collecting the payment from the buyer. This tax is deposited to the government through a TCS Challan with the help of the seller's STAN number. Hence, from this one point will be very clear that if TCS provisions are applicable to a particular seller, that seller should mandatorily obtain a TAN number if the seller is not already having a TAN number. The next question is, who should collect the TCS? These TCS provisions are only applicable to a seller whose turnover in the previous year exceeds rupees 10 crores. Hence, for the current year, that is 2021, the financial year 1920 turnover should be considered. The next question arrives, from whom should this TCS be collected? Answer is very simple. TCS should be collected only from the buyers from whom the sale consideration received in respect of goods is more than rupees 50 lakhs in a particular year. Hence, we have to make sure that the amount received from the buyer only for the sale of goods is more than 50 lakhs in a year. The next question is, what is this sale consideration received? The sale consideration received is the amount received only for the sale of goods. Hence, if any amount is received for providing services, such amount should not be taken into account for calculating the limit of 50 lakhs. And another point arises, whether GST should be taken into account or not. The answer is yes. The amount calculated should be including GST, because if a sale is made to a particular buyer, when the amount is collected including GST. Now let's go to the next question. On what transaction is TCS applicable? As I already told, TCS is applicable only on the sale of goods. Next question. On what transactions are TCS not applicable? TCS is not applicable on providing services, on export transaction, on import transaction, and also on transaction on which TCS or TDS is already applicable under the income tax law. For example, TCS was already applicable on sale of scrap, motor vehicle sales of value more than 10 lakhs, liquor sales, tendu leaf sale, timber sale, etc. So, on such transaction, this new TCS will not apply. Next, on transactions on which TDS was already applicable also, this TCS will not apply. So, for works contract, which is already covered in 194C, this new provision of TCS will not apply. Now, let's go to the next question. Which buyers are exempt from TCS? So if a seller is collecting any money from the following buyers, the seller should not collect TCS from such buyers. And those buyers are: number 1, central government or state government; number 2, local authorities; number 3, embassy, high commission, legation, commission, consulate and the trade representation of a foreign state; and number 4, if the central government notifies any other person in future, from such person also TCS should not be collected. Let's jump to the next question, that is, what is the TCS rate? This is the most important question, and the answer is the TCS rate is 0.1% of the sale consideration received. However, till the 31st March 2021, due to the COVID pandemic, this rate is a reduced rate of 0.075%. Hence, if rupees 1 lakh is received above the limit of rupees 50 lakhs, then on that 1 lakh, 75 rupees of TCS should be additionally collected from the buyer. However, the seller should make note of a point that if the buyer does not give the PAN number or Aadhaar number, then TCS should be collected at a higher rate of 1% of the consideration received. Next comes the question, TCS should be collected on the entire consideration or only on the amount exceeding the limit? The answer is only on the amount exceeding the limit. So for example, if 60 lakhs is received during the year from a particular buyer for sale of goods, TCS should only be collected on rupees 10 lakhs, that is the amount exceeding the limit of 50 lakhs. Next question, when to deposit this TCS? The TCS collected should be deposited on or before the 7th day of the next month of the receipt. So for example, if TCS is collected during the January month, it has to be deposited to the government on or before February 7th, that is the next month 7th. Next question, is there any return to be filed? The answer is yes. TCS return has to be filed every quarter in which the TCS is received in Form 27EQ. In this quarterly return, the buyer's PAN and Aadhaar details are given. So after this return is filed, the TCS amount will go and reflect in the buyer's 26AS, which the buyer can adjust when the buyer is paying income tax while filing the income tax returns. The next question is when to file this TCS return. TCS return due dates are as follows. For quarter 1, that is April to June quarter, the due date to file return is 15th of July. For quarter 2, the due date is 15th of October. For quarter 3, it is 15th of January. And for quarter 4, it is not 15th of April, but it is rather 15th of May. Now let's go to the next question, and that is, should the seller submit anything to the buyer? The answer is yes. The seller should submit Form 27D, that is the TCS certificate, to the buyer after filing the TCS return quarterly. Next, whether GST should be charged on TCS? The answer is no. GST should not be charged on TCS. TCS should be charged on the value including GST, but GST should not be charged on TCS. So here we have to be very careful. Next question, from when to calculate the limit of rupees 50 lakhs for financial year 2021? Though the provision of TCS is coming into force from 1st of October, for the purpose of calculating limit, you should calculate from 1st of April itself, that is from the beginning of the financial year itself. Next question is TCS applicable on the money already collected from the buyer before 1st of October 2020? The answer is no. If money is already received from the buyer before 1st of October, TCS should not be collected on that amount. Hence, for calculating the limit, you should see from 1st of April onwards, but for receiving the TCS, you should see from 1st of October onwards. Next comes the question, is TCS applicable on sale already made before 1st of October but money is yet to be received? The answer is yes. TCS should be collected on money received on or after 1st of October if the limit of 50 lakhs is already crossed, even though the sale is made before 1st of October. Next comes another important question, whether TCS is applicable on sale made last year itself, that is even before 1st of April. The answer is yes. The timing of the sale does not even matter, only the sale consideration received has to be taken into account. So, if sale consideration received from 1/4 crosses 50 lakhs from any buyer, TCS has to be collected on the amount exceeding rupees 50 lakhs. However, if any amount exceeding 50 lakhs is already received before 1st of October, no need to collect TCS on such amount. Now all these provisions will be made very simple with the help of two examples and most of your confusions will get clear. The first example is as follows. Financial year 1920 sale, that is the previous year sale itself to a particular buyer, was rupees 40 lakhs including GST, and the money received from that buyer in the last year itself was rupees 5 lakhs. Hence, outstanding balance as on 1/4/2020 is rupees 35 lakhs. Now, in financial year 2021, up to 30th of September, 40 lakh rupees sale is further made to the same buyer, and the amount received between the 1st of April till the 30th of September is 45 lakhs. Now, on 10th of October 2020, rupees 10 lakhs is further received from the buyer. Here we have to see that from the 1st of October, TCS provisions have come into force, and when 10 lakh rupees was received from the buyer, if we see in the total year, 55 lakhs has totally been received from the same buyer. Hence the limit is crossed. Since the limit is crossed, on the amount above the limit, that is rupees 5 lakhs, TCS has to be collected at 0.075%, that is rupees 375, and paid to the government on or before the 7th of the next month in which the TCS is collected, that is by 7th of November 2020. Further in this example, you will see that there is a sale return from the buyer of rupees 5 lakhs and the outstanding balance was reduced. Next, on 5th of December, the buyer further gave 5 lakh rupees to the seller. Now, in December month, since the limit is already crossed, on the entire amount, TCS will apply at 0.075% and has to be deposited by the next month 7th, that is by January 7th. Now after this, no amount was further received from the buyer and the closing balance as on 31/3/2021 is rupees 5 lakhs. So here if we see in this entire example, we have considered the amount received from the buyer only. That is the amount which are reflected in green color, and all the other amounts are ignored for the purpose of calculation of TCS. So I think you will be very clear. Now what happens to this closing balance of rupees 5 lakhs? This closing balance of rupees 5 lakhs, if it is received in the next year, it will be used to calculate the limit of 50 lakhs in the next year. Also, in this entire example, after the TCS is collected and paid to the government, after the end of the quarter, TCS return has to be filed. That is for October to December quarter, TCS return has to be filed by 15th of January 2021. Now let's jump into the next example. Here also, financial year 1920 sale, that is last year sale, was 40 lakhs including GST, money received was 5 lakhs and opening balance is 35 lakhs. Financial year 2021 sale is also the same, that is 40 lakhs including GST, but the amount received has a minor change from the previous example. The amount received between 1st of April to 30th of September is rupees 55 lakhs. Here we have to carefully note that the amount received before 1st of October itself is crossing the limit of rupees 50 lakhs, since the amount received is 55 lakhs. Now, should we collect TCS on the excess amount of rupees 5 lakhs? The answer is no. Since the amount is already received before 1st of October, on such money TCS should not be collected. However, since the limit is already crossed, whenever the buyer gives any further payment to that seller, TCS has to be collected by the seller. So here if we see in this example, amount received on 10/10, that is 10th of October, is rupees 10 lakhs. So on the entire 10 lakhs, TCS has to be collected and paid to the government. Then again, when the amount is received in January month, on the entire amount TCS has to be collected and paid to the government. Now after the January month, the outstanding balance of the buyer has become rupees 0. After that, the buyer has returned some goods worth rupees 10 lakhs to the seller, and now seller has paid rupees 10 lakhs to that particular buyer. Now here there is a point to note that while making the payment to the buyer, there is no concept of reversal of TCS or negative TCS. Hence, TCS should not be paid along with rupees 10 lakhs to the buyer. TCS should only be considered while receiving the payment from the buyer, but not while making payment to the buyer. So here we have to be very careful. I hope you are clear after my example. And in this example further if we see, since TCS is received in two particular quarters, return has to be filed for both the quarters. I hope you are very clear after these examples. Now let us see the last question, and that is it compulsory to show TCS on invoice? The answer is no. It is not compulsory to show TCS on the invoice because TCS is not on the sale of goods, but TCS is on the amount received for the sale of goods. Hence, it is advisable to issue a separate debit note only including the amount of TCS while collecting the payment from the buyer. So I hope all your confusions have been cleared. If you have any other query, you can surely let me know in the comment section below. And if you have watched the video till now, I am sure that you have liked this video. So don't forget to hit the like button, share this video with your friends, colleagues, other professionals and businessmen so they can also be aware, and subscribe this channel to get more informative updates from CA Nanban. So till the next video, take care. Bye bye.